Welcome to Your Bookkeeping Matters. I'm Lisa Turner, bringing you short and snackable weekly episodes on bookkeeping and business matters in an easy to understand way so you can be in control and confident that you know your bookkeeping matters. Let's dive into this week's episode. Hello, my fabulous friend. Welcome back to Your Bookkeeping Matters. Today, we're stirring up a thick brew, the financial alphabet soup. If you've ever scratched your head at the sea of acronyms and abbreviations in the financial world, this episode is your guide to making sense of so many of the super common ones thrown about. Let's get spoon ready and dive in. When I myself first ventured into the world of studying finance and accounting, I'll be honest, I was overwhelmed by the sheer amount of jargon and acronyms thrown around. I remember sitting there reading my textbooks, yes, old-fashioned hard copy textbooks, my notebook in hand, feeling like I had landed in a foreign country without a translator, thinking to myself, how the heck was I going to learn and memorize all of this? Every time an acronym came up, I would scribble it down on a separate page, promising myself I'd work on those later to find a way to lock those in my memory bank. Because the world of finance has its own very unique language. Much like any trained, qualified and specialized field, whether it's accounting, medicine, technology, or even cooking, shorthand terms and acronyms develop out of the need for efficiency and consistency. But for those first dipping their toes in, it can absolutely be a daunting sea of letters which seem to be expanding everywhere you look. So this dense forest of abbreviations actually isn't about making things complicated or keeping outsiders guessing. It's quite the opposite. They're designed to facilitate faster communication between everyone talking about your numbers, if that's bookkeepers talking to your accountants or vice versa, or us talking to you, being the business owner. But yes, when you're first on the outside looking in, it can feel quite alienating. And this is why I believe so strongly in demystifying financial jargon. For everyone, regardless of their background or expertise level, deserves to know what these mean and not be overwhelmed by them. Financial literacy, in my opinion, is empowerment. When we understand the language and put our own helpful spin on what it means to us and how to remember it, we can make more informed choices and confidently steer our businesses and, above all, feel a little less lost in those crucial financial conversations. And this is one of my ultimate goals, of course, helping you know your numbers. I remember the satisfaction for myself, the aha moment when I began to decipher these codes, the joy when dealer wasn't only an employee at the casino I used to work at or a random collection of letters, but actually a meaningful word which stepped me through remembering how to enter transactions, which side debit or credit. And now I don't even have to think about debits and credits. I just know without even thinking. And this is exactly what I hope for you, to transform confusion into clarity and uncertainty into empowerment. So have your coffee at the ready, because today we're doing exactly that. Let's break down this alphabet soup so they can become powerful tools in your knowledge toolkit. I'm going to introduce you to some commonly confused or unknown acronyms I'm often asked about. And this is only the tip of the iceberg today, though. If there are any you're unsure of or want to know more about, feel free to drop me a DM on Instagram or check out my blog, Financial Jargon Explained, which has loads more there for you. Number 1, ABN or ACN or ARN. The first one, ABN, is an Australian business number. If you're running a business in Australia and you're trading and you want to invoice someone for your goods or services, you must quote an ABN because you're in business. The next one, ACN, is an Australian company number. All companies, let's not confuse this with businesses, company structures must have an ACN. They don't necessarily have to have an ABN. The ABN is only required when the company trades, as in is operating a business, because lots of companies are holding companies, parent companies, and the like, depending on the structure set up. So if you have an ACN, you don't have to have an ABN and vice versa. It depends totally on you, your circumstances, and your setup. And the lastly, lesser known cousin, the ARN. Loads of people don't even know this one very well or understand what it means. It's an Australian registered number. And this one is about identifying a business operating or selling into Australia, but isn't an Australian business structure. And you can think of this one like a visa for businesses. If you don't provide your ABN to these businesses that have an ARN, they'll oftentimes be required to charge you taxes. And a very important differentiation here to keep in mind, if someone with an ARN has charged you GST and they only have this ARN, you cannot claim the GST. You claim the full cost as an expense instead. I'll dive into this further down the track when doing an overseas episode, but basically remember, you can only claim GST when a valid ABN is quoted and the ABN is registered for GST. Number 2, BAS or IAS. They're 2 different ATO lodgement forms and lodge different information. The BAS here in Australia is a business activity statement, the form you submit to the ATO, Australian Tax Office, to report your GST ins and outs, and a few other taxes might be relevant to you. Head back to one of my super early episodes if you're keen to know more about the BAS, what is a BAS, and key areas to look at. And the other form is an IAS, Instalment Activity Statement. Very similar to your BAS. It's also a form lodged to the ATO, but this one is specifically for when you only need to report PAYG instalments and or withholdings related to personal and employee income. PAYG is coming right up next. But the BAS has GST and other taxes on it, whereas the IAS only has PAYG. Number 3, of course, is PAYG, which is pay as you go. The ATO like us to think of this as helpful, where instead of paying one giant tax bill per year, you're paying income-related taxes in installments as you go. Now, there are 2 types, PAYGW. Pay as you go withheld is the first one, and it's if you have employees on the books. The tax calculated in the pay run is the tax you take out of their pay before giving them the net amount. So this is what PAYGW is. The other one, PAYGI, pay as you go installments. It's essentially you chipping away at prepaying amounts towards your own income tax for either personal income tax for sole traders or the company's income tax for company structures. Now, the rest we're absolutely going to fly through as they're super simple once you know what they are. They aren't big topics and they're not too much to wrap your mind around. Number 4, BS and P&L. If you've been running your own business for a little while now, chances are you know your P&L from your BS. But a P&L is a profit and loss report. This one totals up all your income, less all your expenses, to give you an overall profit or loss, telling you how financially fit your business is and how well it performed for the time frame that you're looking at. That could be last month, last quarter, last financial year. And the BS, or balance sheet, is a snapshot of all your assets, things your business owns and cash, and your liabilities, money you owe people, suppliers, banks, and your equity, your investment in the business. Number 5, COGS and costs. COGS, COGS, is your cost of goods sold. It's the cost of things used to produce or make the goods you've sold. So if you're a baker selling those yummy cupcakes, it's the flour, the sugar, the eggs, and all the other jazz. It's the cost of making the goods you've sold. Costs, COS, cost of sales, is super similar to COGS, but broader and more generally used in service-based business because it can include costs relating to services or digital products used to provide the services, and still good sometimes, you sell, but only those costs cost of sales specific to what you sell, not your general daily software and other fixed and operating or daily costs. Number 6, GL account or COA. They're both the same. GL account is your general ledger account, whereas COA is your chart of accounts. It's just two different names for the same thing. It's your list of accounts or buckets you use to categorize all your income and expenses into, which go on to create the beautiful P&L and balance sheet. GL by itself is your general ledger. It's like the master list and balances of everything, and it's where your P&L and BS, balance sheet, pull their information from. Number 7, ROI, not to be confused with the more common ROAS. ROI is your return on investment. The return you get on the money you invested into things, the goods, the services, essentially how much bang for your buck. Your ROI is how much profit you make from selling the thing compared to how much you spent on it. And the ROAS, if you're in the digital paid ad space, is your return on ad spend. So same deal, but it has its own pretty acronym, meaning the very same as ROI, but specific to your ad spend. How much profit did you make per dollar, or how much sales did you make, per dollar based on the ad spend. And number 8, single touch payroll, STP. Here in Australia, this is the way we report wages, tax and super for our employees to the ATO each and every time they're paid. It's giving the ATO real-time updates, and it's a must-do in this day and age. If you think you know payroll but haven't dipped your toe in for many years, times have changed and you absolutely have to get on top of this acronym, STP, before you employ and pay anyone. And lastly, number 9, BOOT, the Better Off Overall test. We splash this around with employee reviews and income calculations because this one is making sure your employees who are working under your contract or enterprise agreement are better off overall compared to the relevant Fair Work Award and the legislations. The Fair Work Award is the baseline. You can't contract away from this and pay less or worse conditions. So if you want to do something different, you have to do the BOOT and make sure what they're going to be paid is better off overall than if they were paid the minimum award. Whew! While it was a lot, it also might have felt like we haven't even touched the edges of our alphabet soup because, yes, there are so many others. But today I wanted to let you know the ones I find people aren't sure of or confused with others. I also want to share 2 quick tips for you when you're navigating your own financial landscape. Firstly, stay curious. When you come across an unknown acronym, pause and take a moment to look it up. Remembering to use good and accurate financial sources. These will be your best friend here. Don't see an acronym and think, oh my gosh, that's too hard. Generally, it's just a really simple name made up for something to use for convenience. Next, if you're still stuck or want to know more, consult an expert, not a Facebook group of a non-financial background, and not TikTok unless it's one of those stellar accounting people, and there are some amazing ones out there. Do your research. And while this podcast is all about supporting you to understand your finances and obligations, it's general insights and advice only. I don't know the ins and outs of your business, so it's essential to check in with your trusty professional tax agent, your tax accountant, or BAS agent, your bookkeeper, who are keeping their finger on the pulse in your numbers. If you're wondering what the acronym DEALER stands for, I mentioned back at the start, and want to know a little nitty-gritty detail, it's a super common handy mnemonic to remember debit and credit rules when we're doing manual entries or wondering how a transaction works. So DEALER, it's drawings, expenses, assets, liabilities, equity, revenue. The first 3 all increase with the debit and the last 3 all increase with the credit. Super technical bonus one there for you, but if you love your debits and credits like I do, you'll love DEALER as much as I did when I was learning. Well, there you have it, a guide to navigating the dense financial alphabet soup. Remember these acronyms, they may feel intimidating. They're only shortcuts to larger ideas, and they're there to make things a little easier. And with a touch of patience and the knowledge you've gained today, you'll be stirring your soup with confidence in no time. Thank you for tuning into Your Bookkeeping Matters. If you found this episode helpful, or if there are other acronyms you're curious about, reach out on Instagram at AccountedForYou, or please leave a review. I love hearing from you and reading your reviews and feedback. So until next time, keep those numbers in check and your business thriving.